It's Let's Talk Business, everybody. I'm J.B. Bryan, President and Chief Investment Officer at J.B. Bryan Financial Group, the home of AfroEconomics, a registered investment advisory firm. And this is a great opportunity to talk about, I was yesterday just checking out the news all day long. They were talking about everything about the tax reform, and everything that was discussed was not about anything that was going to empower us. And I said, I have to continue to bring home the fact that there is no power in us not getting the information that we need that can help us. I don't care what happens. If we're smart, we can always figure out a way to make it work to our benefit. Always and forever, y'all. There's always someone told me yesterday. He said, "Oh, you're a loophole finder." I said, "Yeah, you can look at it that way, but most of the time, it's not even a loophole. It's something that's straight obvious. But when we're distracted by everything that's wrong, we really can't see everything that's right. Like we do it. You do that with our life. We do that with our family. We do that with our kids. Unfortunately, they make a mistake. We jump all on them. When they do something that's right, we just say, oh, that's good. Well, we got to get really excited about everything that we can take advantage of as business owners in this plan, because they'll say like, oh, well, it's going to help business owners a lot. Well, isn't it good that you're a business owner? Isn't it good that you are an entrepreneur? The reason that businesses should and deserve to have these benefits is because people need jobs and businesses create jobs. So even if you're watching this and you work somewhere and you work for that business, I'm telling you, when things are good for the business, you don't have to worry as much about if they're going to cut out jobs, if they're going to not give you a raise this year, if they're not going to, hire new people because you got too much darn work on you, so these are the things. So if businesses win, and why does somebody have to lose just because somebody else is winning? Or why does it have to work to my disadvantage if a rich person gets to take advantage of a tax savings? Now, we really have to focus on the fact that we want to progress. We don't want to be at the same place. Next year, this time when we're talking, we want to move forward. There's no energy in trying to make sure that somebody else doesn't move forward. So it's like you're running down the street and you can't run because all your focus is on trying to make sure that the other person trips. Well, if you just focus on running, you will be all right. You don't have to really focus on the other person. You shouldn't focus on it at all. You should focus on what's in this for me. Let me get my best run. Let me get, like we say in motorcycle riding, ride your own ride. Let's get what's in this tax program that's going to work to your benefit. Don't listen to anything that's not focused on how it's going to help you. Make sure that you get the help that you need. Don't focus or cooperate in this nonsense on trying to make sure that somebody else doesn't get something. You make sure that we put all our energy in talking to our Congress people about this is what I need for me. I need to have tax advantages for my small business. I need to have a reduction in expenses to my small business. So a key thing for your small business is that the statistics show that 90% of all businesses are not a C corporation, a conventional corporation. 90% of businesses are sole proprietorships, subchapter S corporations, partnerships, and LLCs. So the new tax reform lowers the rates on pass-through income for all those entities. So I could just drop the mic right there because nobody's heard that on anything. Nobody's talking about the fact that lower rates for pass pass-through income for sole proprietorships, subchapter S, partnerships, and LLCs. Now, my business is a C Corp. That's not talking to me, but there's advantages in there for C Corps too, you know, when they talk about income tax rate for corporations going down. But it says 90% of the businesses are other than a conventional C corporation. So we have to realize that it's BS if they're saying that there's nothing in here to benefit you as a business owner, because it's probably, if 90% of overall, then when I'm talking to Black businesses, then it's probably 99% of Black businesses have been told, every time I talk to somebody, they got an LLC and it's a pass-through. And they go, what are you talking about, pass-through? And I'm talking about, I have entrepreneurship in AfroEconomics, entrepreneurship membership. That's the stuff that we talk about. So, but most of the people go, what are you talking about pass-through? What are you talking about? Because they just turn their info over to their tax preparer and they never talk to a financial advisor when it came down to actually deciding what type of entity they have for their corporation. But we don't talk about what it should have been, it coulda, woulda, whatever. No, we just talk about that's what you are. This is how we maximize it. That's all we got to do. That's all we got to do. So these pass-through entities, your person, your business is an entity. So if you do a Schedule C and it's a sole proprietorship, it's an entity other than you. So those entities now are paying, the entity doesn't pay taxes like a conventional corporation. They flow through the income for that entity, your business, flows through to you. So instead, income from the business passes through to the business owner, who pays taxes on the business profits at their marginal income tax rate. Just want to read to make sure that I share it with you correctly. So now with the marginal income tax rates being lowered, it helps you be able to pay lower taxes on your business income also, because you're passing it through. Wow, right? Right? So we're going to see how it all comes together, but these are the major areas of what they're talking about for business owners that we're going to discuss. So that one is, look out for lower rates on your pass-through income because your income tax brackets are being adjusted. So then also lower tax rates on conventional corporations. Corporations make up the other 10% of all businesses, and they decided to lower, well, if this all comes together and it all comes out, and we'll talk about it then when it's all confirmed and set up. So with all that, it would be lowered from the 35% highest rate to a 20%. And it's saying that would be starting in 2019. Let's see how it all comes together. We're going to stay on top of this, because if all of this is like a lot to me, then I can imagine as a business owner, that it's just a lot of stuff going through your head. And if you're listening to the news, you're thinking this is the end of the freaking world, when actually as a business owner, this can work to your benefit. And then there's also, we were talking about net operating losses. Now this is some good news, and you can look at it and say, oh, there's some bad news too. But on net operating losses, you could do a 2-year back. It's called losses. You could do, your businesses can carry their losses back 2 years to recover past tax payments. That's the way it currently is. And then carry them forward. Those losses can be carried forward for up to 20 years to offset taxable income in subsequent years. Well, now it's saying that both the House and the Senate versions of the tax bill eliminate the ability for you to carry back those 2 years. Forget it. Forget the carry back, they're saying, as far as going forward. But they can be carried forward indefinitely, but you still have to pay some income taxes. Remember that in the presidential campaign, and they were saying about, you know, Trump not paying any income taxes, and that's what they were talking about, because you can carry your losses forward. It was up to 20 years, but so, you know, it could, I don't know if they said maybe it was like 10 years where his losses were so dramatic that he was bringing losses forward for all that period of time until all the losses from that bad year were eliminated. But the, and we're talking about on a business level. So then the, now they're saying that's not going to happen anymore. Now you have to pay at least 10% of your income has to pay some current taxes on it, but you can carry those losses forward indefinitely until they run out, you know, but you have to pay some. So it says indefinitely, but limited to 90% of taxable income. Elaborate, but these are things I just want you to think about so that when you're speaking with your tax preparer, you at least have an understanding, or it doesn't sound rare to you that these are the, you know, type of things you just want to say, well, has the pass-through rate changed? It has my corporate income tax, is it lower this time? Or the net operating losses, whatever came of that, do you know, and I hope you don't have any losses. The losses are not really what we're shooting for, but if you have them, you want to have a full understanding of the tax laws, because so many people have a loss and they just think that they can't do anything with it, and then that is bad, and that, you know, you have to just go out of business because you can't do a tax return having a business loss, and that's not true. So we need to, that's why the entrepreneurship membership is so important, so that we're a team and that you have someone in your own, your same financial mindset, thinking about how I can, this particular change, this particular situation, how do I help it strengthen me and my business, right? And then a fourth point is that, expenses for businesses. Now, currently that you have, where I'm going to read the proposal, the way it is now. Normally, business assets with a useful life of greater than 1 year must be capitalized and depreciated over a period of several years. So if a useful life of more than 1 year, that would be like, you know, a car, right? That's a whole bunch of stuff, a computer too. So the depreciated over a period of several years, rather than expensing the cost of the asset in the year that it's purchased. Well, now you're trying to set it up, and it's, you know, that you can actually don't have to worry about that for assets, for personal property assets, they're called, meaning it would not include land or buildings, and that you could actually immediately take the deduction for the full cost of the tangible asset, and there used to be a depreciable personal property that now could be expensed off immediately. So it will allow you to, basically get the tax advantage immediately versus having to wait for the tax advantage for years down the road. So that would have to be depreciated over a select period of time based on the tax code for that particular item. So it's saying that the limit will be for the purchase of that property that you could write off immediately is going to be somewhere between $500,000 and $1 million. But just ask about that. Ask about what expenses can I write off immediately? Are there any changes? What can I do? And of course, you need to, ask about what you're depreciating right now. What expenses are you writing off immediately right now? How does that affect you? You're at year's end. What do you need to buy right now? What could you buy if this happens? Would it be next year that you would buy it, or would it be for 2019 before it would be relevant? But we just have to watch these things carefully, watch them closely. And a final point that I want to share is that it's going to allow for faster depreciation, hypothetically, this is the intention, this is what we're hoping for, faster depreciation of real property versus what I talked about before, personal property. Real property, that's going to be like your real estate, and so this is faster depreciation of real property. Currently, commercial real estate must be depreciated over 39 years. So what that's happening, and then if this happens, right now we're looking at changing it from 39 years to 25 years for to record as the asset life for residential and commercial property that is used as investment properties. So these are, for the same, for example, in the current situation, if it were $1 million property, then you would have an expense of $25,000 that you could write off each year. Where if this is accepted for $1 million property, at 25 years, you will be able to write off $40,000 each year for that 25 years. So those are some things I wanted to highlight, that there are, some key things that as business owners, we need to focus on. Then you're going to hear some things about itemized deductions being eliminated. There's even the home use of your business, itemized deduction, business home use or business office, itemized deduction will be eliminated most likely, and that doesn't affect people who are doing a Schedule C. This is people that work for corporations that have sent them home and they're using their home office. But you'll know that the overwhelming majority of us, not just majority, the overwhelming majority of us benefit from the current standard deduction anyway. So you're not itemized, you're not getting the benefit of that. So if this goes through with doubling the standard deduction, then you're not even going to worry about, you can't write off. You haven't itemized that home office expense because your standard deduction is doubled. So you're doing much better if this is to go through. So let's continue to learn and be empowered, and don't listen and don't allow fear, but allow empowerment to lead us through it. Separate yourself as powerful, knowledgeable individuals. Separate yourself from the politics of it and focus on how does this professionally, entrepreneurially, personally impact me? How do I maximize it? Let me talk to JB Bryan. Let me get that entrepreneurship membership. Let me get empowered. Let me maximize every opportunity that comes my way and make it work for you. How do you do that? Make sure that you continue to support these webinars. Join. Get the personal attention. The membership for your entrepreneurship membership is not some generic videos that you download and you watch at your leisure. It is about me and you doing personal meetings and doing things to help you build your business, just as the individual or the family membership. And the Giuliani membership is very powerful because a portion of your membership goes to a nonprofit. So check out the membership options at AfroEconomics.com. Check out the membership and continue to be empowered. I'll be checking on you tomorrow. I'll be on WTVR CBS 6 talking about single women, and a study that was done on some financial steps that we need to take. I'm a single woman myself, on what we need to be doing and be aware of what we're not doing and for financial empowerment. And today, it was about entrepreneurs. And make sure you look out for this on YouTube, subscribe, comment, like, I hope, on this video. If you want to go back over some parts that you may have missed. If you have specific questions, email me at jb@afroeconomics.com or jb@jbbryan.com. Have a wonderful, wonderful Sunday. God bless y'all. I hope that all y'all in that webinar are are just silent because you're just like, wow, this is some good stuff. I hope this happens. Uh-oh, we got somebody to raise their hand. Yes, indeed. Okay. I know you raised your hand. What's your question? Beautiful. She put her hand down. Well, y'all be empowered. Email me as you need. Oh, maybe she was doing like a high five. That's what that was. That was a high five back. God bless y'all. Talk to you soon. Bye-bye.